Hello viewers and welcome back. You're joining me, Natalie MacDonald, for another exclusive interview. In the studio now is Didier Van De Veire of Petercam. Didier, thank you very much for coming in today. Okay, so Petercam's fund philosophy is to actively manage. Quite an intelligent approach when we consider the volatility 2013 has brought. You also maintain a value-adding approach. Can you walk us through this a little bit?
Okay. As an active investor, Petercam is mainly focused on stock picking, so we want to keep a low tracking error but a relatively high active share. And so as an active investor, we focus on those ideas that actually are creating value for the shareholder. So we do not invest in something because it's big in an index and it has invested a lot of capital in the past. We want to invest in something that actually creates value for the shareholder, and preferably something that creates value but also grows the business quite strongly. So we think a combination of those two items actually brings quite a lot of value to investors. Obviously, valuation then is quite important. So we try to mix the two together, and we try to use that and create a portfolio that actually creates value for shareholders, not just replicates the index, because we think the index is not really always a good repercussion of what is actually creating value. So we try to focus on mid caps that we think is really creating value, where it is also often under-researched. So if it's under-researched and it creates value, it can be a powerful combination for performance.
Transaction activity is something that's formed a large part of your Q4 strategy, but beginning the quarter, in fact, on a transaction activity uptrend. With that in mind, how would you describe your risk appetite?
But we've always been very active in offerings, reofferings, IPOs. We think as an active investor, it's our duty to look at those kind of issues, and is there something that we think is attractive and we get a nice discount on it, is something where we are willing to participate in the events. Obviously, it's only in those issues where we think there is a long-term attraction, otherwise we will not do just a short-term trade, because our philosophy is that we want to invest in assets for the long term, not just for the short term. But if we can get those on board with a nice discount, it's always helpful.
What response then have you seen in the equity markets, and how is that going to shape your fund mandate as we head into 2014?
Okay, well, 2012 has been characterized as actually a year where quality did extremely well, and quality with low volatility on the top line. But this year was actually a bit of a risk-on rally, where lower quality names with a lot of leverage did extremely well. It's not something we are particularly keen on, although we've done a relatively good performance this year, but we are more based on what is quality, growth, or generates a lot of cash flow. So we are positioned in names that give you decent cash flows and that hopefully will benefit from a cyclical recovery as well to grow those cash flows. And so we think the middle of the pack, so not the high quality names or the low quality names, will actually do quite well next year. And in that environment, obviously stock picking becomes key, and we think we have a relatively good track record in that.
Something I wanted to end on was this idea of a Christmas rally, which we've heard some discussion of late. Are you anticipating a Christmas rally as we head into sort of these closing weeks of 2013? And similarly, are there specific areas that such activity is likely to be concentrated on?
But historically, there's always been something like a December rally or Christmas rally, how you want to call it. We obviously manage for the long term, so we try not to invest in something just for the end of the year. Obviously, it has always been a quite powerful month in terms of performance, but we try to invest for the long term, so we will not change our portfolio because of what's going to happen in Christmas or even the January effect, because that's often quite strong for small caps as well, where we're quite active. So we try to invest for the long term, so we'll not change our portfolio for that. But then it always creates opportunities. If something becomes too expensive, we'll sell a bit. If something becomes less expensive, then we'll try to exploit those to create performance over the longer term.
Didier, thank you so much for coming in and sharing your knowledge with us. Thank you.
Thank you.
That's all we've got time for right now, but don't go away. I'll be back shortly with another exclusive interview for you. Goodbye for now.